Good evening, friends. Hope you all are well and doing fine. I am Ashok Kanawala, and on behalf of HDFC Mutual Fund, extend a warm welcome to all of you on our call to discuss market outlook and the NFO of HDFC Business Cycle Fund. With me on this call is Rahul Baijal, the fund manager for HDFC Business Cycle Fund, and my colleague Siddharth Gupta, who will be moderating the call with me. Before I introduce Rahul and invite him for this call, just to brief on the current market, in the sense that if you all recollect, of course, we are towards the end of this calendar year, but this year itself has been very eventful, starting from January month when we had this Omicron variant of the COVID, and then the US, USSR, Ukraine war, and then the impact on commodity prices, and then on inflation, and then the interest rates rising globally. And all this has been very challenging globally, and markets also have reacted accordingly. And there are people who are saying that there will be slowdown or there will be sort of a recessionary type situation going into 23. But when we look at India, it appears like an oasis of hope. So whether it is in terms of depreciation of currency or it is in terms of managing inflation, or for that matter, even markets. Markets today, when we see, despite what is happening world over, are trading close to its all-time high. So what is the reason why we believe that India is an oasis of hope? And therefore, we have Rahul with us, who will explain to us his understanding of the economy and the market. And of course, thereafter, our forthcoming NFO of HDFC Business Cycle Fund. Why and where is the opportunity? Now, Rahul comes with an experience of over 20 years. He joined HDFC Asset Management Company in last July, but earlier he's been associated with different mutual funds, has a good track record of managing funds successfully in other assignments or in his previous assignments. And over the years, because his research experience and fund management, we believe is the right guy to navigate this fund going forward. Rahul himself is an engineer by qualification and has done his management from IIM Calcutta. So, with this, now I invite Rahul to take us forward with his understanding on the market and the forthcoming NFO HDFC Business Cycle Fund, why it makes sense for investors to invest or distributors to promote this fund at the current juncture. And of course, as I said, Siddharth Gupta, my colleague, is with me, who will be moderating the call once Rahul is done with his presentation, and we'll open for question and answer. So any questions, please feel to write in the chat box or in the question answer link, and we will be more than happy to get them answered once Rahul is done with his presentation. Rahul, on this call are our investors and distributors across India. We'll be more than happy to have your thoughts on the market and, of course, the forthcoming NFO. Over to you, Rahul.
Sure. Thank you so much. Just before I begin, is the presentation visible?
Absolutely.
Okay, great. Thank you, Ashokji. I'll probably spend some time initially, like he mentioned, on the economy and the equity market outlook, the way it's looking to me, and then give some color on the NFO, which is coming up, as you know, later this week. So firstly, on the Indian economy and the equity market, this slide just gives you a good perspective as to how steady the Indian growth story has been over the last 10 years, over the last 20 years. And in terms of the growth outlook also, if I look at the next 5 years, like Mr. Ashokji mentioned, India stands like an oasis of hope, an oasis in the desert. Why desert? Because we are clearly seeing a lot of news flow coming, which is quite weak on the global front. Every day, news commentaries of some recession or some slowdown in the West. So if you look at the West, what's happening? We are looking at economies in the US and in Europe, where inflation is running at 8, 9, 10%, and growth, the structural underlying growth is about 1, 2, 3% max. But if you look at India, we have been growing at about 6, 7% in the past with 6, 7% inflation. Right now, even the growth is around 6, 7%. It may slow down a bit next year, depending on the extent of the slowdown in the West. And in even inflation, which is around 7%, it's something which we have seen in the past. As you can see, over the last 10 years also, inflation has managed about 7%. So it's not much of an issue for India because the gap between growth and inflation is very small. When the gap between inflation and growth becomes very high, that's when the problem begins, and which is what the big problem in the US and the Europe is. That's why you're seeing a lot of interest rate hikes happening, both by the Fed and the ECB, and other central banks around the world are also raising rates to, arrest this problem of inflation. But why do we say India is an oasis in the desert? Uh, See, if you look at India, India is very favorably placed, in my view, on many business cycles front because a lot of things structurally on a macro basis are looking good for India for the next 5 year perspective. And a lot of experts say that India is on a path from 3 trillion to 5 trillion over the next 5 years, which implies around 10, 11% kind of nominal GDP growth. If you ask me, am I in that camp too? My answer is a strong yes. And why I say yes? Because I think there are so many big cycles which are looking good. If I look at India from the next 5 year perspective, and this is a quick summary of some of the cycles. You have a manufacturing cycle which is looking up. You have a reform cycle which is leading to unorganized share shifting to organized. The banking system is in very good shape. The real estate cycle is just beginning. It's in year two, and I think many good years left ahead. Balance sheets of corporates and households, very good shape. And we have some concerns, like I mentioned, of inflation and interest rates, but more so global than local. So let me throw some more color on some of these cycles. Firstly, the Make in India cycle, the Atmanirbhar story, as you know, it's more popularly known. Why is this happening now? I think services was a very strong success story from India. IT services being a big example. Manufacturing is something which we have lagged, but I think a lot of reforms done in the recent past and government's special focus towards this, and for the right reasons, because manufacturing creates a lot of jobs as well. And on the back of these reforms and initiatives, we are seeing a lot of MNCs relocating or diversifying their supply chains by setting up more and more factories in India. Case in example is Samsung and Apple, which have set up big factories in India for the respective mobile phones. So all we need is this 2% market share, which India has in the world manufacturing exports to move to about 3, 4% over the next 5 years. And we have a strong growth story. Unorganized to organize is a theme which happens in as the country becomes more and more developed. And that's the story with India as well. You're seeing reforms like GST and digitization driving this change from unorganized to organized. And as more and more of the shift happens, more and more sales will get recognized officially as GDP and will show up in the nominal GDP growth. Banking system. Any economy, any large economy like India, which is aspiring to move to 5 trillion over the next 5 years, needs a very strong foundation for growth. And that foundation in any economy comes from a banking system. Because unless the banking system is in good shape, no economy can have a credit growth multiplier, which ultimately leads it to become big. And you can see in the results coming out, banks are reporting good numbers. The assets quality cycle is good. They are well capitalized and credit growth is picking up. So I think this is a very important tick mark. Real estate cycle, after being in a downturn for 2013 to 20, during COVID, we are seeing an improvement in sentiment towards more and more people looking to consume houses, looking to move in bigger homes due to work from anywhere culture. And even on the supply side, reforms like RERA have ensured that the quality of homes coming out in the supply is good. This is an upcycle. Private sector capex cycle is something which was missing for a few years, but last 2 3 years you're seeing over and above the government capex, even the private sector, which is sensing a huge growth story in India emerging, is beginning to loosen its purse strings and starting to invest. Balance sheets again at the corporate level have been good. They have been deleveraging, as you can see in the bottom right chart over the last 4 5 years. And with rising interests in Make in India also of MNCs, they are also setting collaborative tie-ups with many MNCs to enhance the capacity utilization and capacities across various sectors. Startup ecosystem is again a success story, whether you go to the south or the west or the east or the north, whichever part of India, you have cities where you're seeing the rise of unicorns. And if you look at the bottom left chart, India beat China last year in terms of number of unicorns. It's not happened before over the last 15 years. We had 33 unicorns last year uh, versus 19 in China, and a lot of interest in private equity in the startups. So again, this looks very good. So if you summarize, all these cycles, I think India is looking in very good shape over the next couple of years. As you can see from the IMF projections, the world is entering a slowdown next year. Growth will be probably less than 1%, if not worse, in most of the advanced economies. China is growing around 3 4%. So India, even if it grows at 6% or even at 5%, I would say, with a 5% growth and a 5% inflation and a 5-5 story in the short term, I think is still a decent outcome, because the more exciting story is a 5-5 story in the medium term. And what is a 5-5 story in the medium term? A 5 trillion economy in 5 years. And I think that's the key reason why our equity markets are outperforming. The currency market is outperforming, what Mr. Ashok also referred to earlier. Even the interest rates increase have not been much high in terms of, versus what's happening in the rest of the world. So keeping the big picture in perspective, I think valuations in India will remain a bit stretched. Valuations will be available at a premium, because when you look at a compounder stock, you always say that this is looking a bit expensive. But why is it expensive or valuation is high? Because there is confidence in of the growth story in the past, and there is confidence of track record, and there is confidence that such quality of growth may continue in the future. So think of India as a quality mid cap with the potential of becoming a large cap. And therefore, in my view, the premium valuation should continue as long as the story and the path to $5 trillion is alive over the next 5 years. I think India will continue to have a premium as far as the valuations are concerned. So that's a quick update on the economy and the market. Now, in the second part of the presentation, I'll move to the NFO. As you know, we are launching the HDFC Business Cycle Fund, and the NFO begins this Friday, 11th November onwards. I'll split this part of the presentation into three parts. Firstly, I'll give some color on what business cycles are all about, what this category is all about, what business cycle investing is all about. And secondly, I'll talk about the portfolio strategy, which we are following in this particular product, and some risk metrics which you are following. And lastly, the suitability of the product, why you should or why any investor should look at this product, and what is the suitability. So firstly, in terms of business cycles, before I begin, I also want you to keep an eye on the top left corner. What it suggests is a global positioning system or something like a Google map, which you're all used to. And why we use this map is to ensure that when we are moving from our place to another location, we choose the right path. We avoid the path which has a lot of traffic, and we choose the path which has low traffic, and so that we can reach our destination faster. But I'll complete the story later. So once I talk about the strategy of the fund. But please remember this Google Maps comparison, which I just began the presentation with, and I'll come back to it later. So what are business cycles? Business cycles typically, have four phases. You have an expansion phase and a peak phase, which is called the up cycle, and you have a contraction and a slump phase, which is called the down cycle. And typically, I, along with the analyst team, monitor these cycles based on certain parameters to figure out how different businesses, different subsectors, what stage of the cycles the various businesses are. And if you look at our economy and our market, we have various cycles in play. Business cycles is just one aspect, but you have the cycle of psychology, which is the greed and the fear cycle in the market. And you have a market cycle, which is about valuations being high, then valuations get low. And then you have an economic cycle in which economies sometimes are growing at a very fast pace, sometimes at a very average pace, and sometimes they go much below average. So, as a fund manager, one has to be cognizant of all these cycles in the market, and which I am. And business cycles is the special focus which this particular fund will focus on. Before I go to the strategy, just want to explain we should not confuse sector with businesses, because one sector can also have multiple subsectors or multiple business cycles. For example, auto. A lot of people talk auto as one sector, but no, auto is not one sector. Auto has four subsectors, four business cycles. What are they? You have a two-wheeler cycle, you have a four-wheeler business, you have a CV business, commercial vehicle, and you have a tractor business. And all the companies which are manufacturing the products, the vehicles, or which are supplying auto components, essentially are feeding into these four business cycles in their own businesses, in their own manner. Similarly, pharma has multiple cycles. You have diagnostics, which we are all used to during COVID, hospitals, formulations in India, formulations in US. So look at sector at not sector level, but look at sectors at a subsector level from a business cycle perspective. That's the point I want to make. So what do we do in this fund and the strategy? The strategy is basically to create a portfolio which is dominantly invested on the cusp or midst of favorite business cycle kind of stocks, and you avoid stocks which are about to enter or already in a business down cycle. So that is the core of the theme, core of the strategy. And by following this strategy, I think the benefit of business cycle investing is that you get a portfolio of companies which give you a dual benefit of earnings growth as well as improvement in valuation multiples. And if you can use the team's expertise, the domain expertise, and the recurring patterns in economic history to identify positioning of cycles, you can position the fund well ahead in advance. And this set of investments are not fixed in nature. These can be rotated and change based on how the understanding of the business cycle changes. So that's what the strategy is all about. And more than 80% of the portfolio will be in these kind of stocks. In terms of diversification, it will be diversified across the market cap curve. There's going to be large cap, there's going to be mid cap, and there's going to be small cap. In terms of number of stocks, also it will be diversified, about 40, 45 to begin with, and max 50 on an average. So that's the broad portfolio strategy. And like I said, to identify business cycles and to business cycle investing, we'll be following a blend of top-down, bottom-up approach, along with the excellent team of analysts, which HDFC has. It's a 10-member team with about work-ex ranging from 10 to 15 to 20 years. And here are some examples where I will not go into deep into, but when you have the time, you can have a look at leisure. These are examples of business cycles in India over the last 20 years, which we have been tracking, whether it's IT services, banks, autos, pharmaceuticals. And in all these cycles, you see that whenever earnings growth look up, usually price to book, price to earning multiples also go up. So a portfolio position around these cycles will give a dual benefit of earnings growth as well as likely improvement in multiples. So that's what uh, the case study suggests. And we have many up cycles, like I presented in the economy. And then if you look at the businesses also, banks are in a big up cycle, within autos, CV is an up cycle, two-wheelers are down cycle, tractor is a down cycle, but cars is an up cycle, pharma is in a down cycle, e-commerce is an up cycle, capex has many subsector up cycles. So these combined with the other cycles I mentioned before, you have a diversified play of business cycles to invest in. So that's what this fund will try to do, and because it will be positioned and creating a portfolio where the outlook is looking good, the business cycle is looking good, this could also result in exclusion of certain subsectors and sectors present in the benchmark. And therefore, through this approach, you'll have a reasonably diversified portfolio of subsectors and businesses, but also taking active calls in terms of the allocations. And therefore, your benchmark overlap and your sector deviations will be wider versus the benchmark. And therefore, your benchmark overlap will also be a bit lower than the traditional products. So, lastly, coming on to the product positioning, what is so exciting about the product? Why now? I think it's an evergreen product because it's a product which is quite diversified in its scope, whether it's in investing in a considered manner in a multiple set of business cycle themes, whether it's number of stocks, whether it's across the market cap curve. Uh, so the standard pushback which comes against a thematic fund is that, hey, this is a fund which invests in one particular theme, and to time that theme is very important, which means getting in and getting out is important. So that is true for certain sector funds or certain very singular theme kind of funds. But this particular fund, while it is in the thematic category, I think it's a buy and hold product, and it's an SIP product as well, because at any point in time, uh, the theme set is quite diversified in terms of multiple businesses, 6, 7, 8, 9 to begin with. The number of stocks are diversified, and you'll have an exposure of both large cap, mid, and small cap managed in a dynamic manner. So that's the standard pushback, which is not valid for this particular thematic fund. And that's why I think it can be a core allocation product, it can be a buy and hold product, and it can be an SIP product as well.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.